E-mini S&P start the week off moving higher today, getting all the way up to 57.75. Didn't quite get to that new all-time high, but certainly within a stone's throw of it. Equities obviously have been on a tear moving higher since FOMC. That has continued, but clearly the market right now looking forward as we continue to see the market look for more aggressive rate cuts as we look ahead to November and December FOMC. Right now, market kind of torn between whether they're going to go 25 or 50 at the next FOMC meeting. It'll be interesting to see what happens between then and now. Clearly, the next two job prints as well as more inflation data will play a big role in that. But E-mini S&Ps continue to move higher again today, closing out at 57.75, slightly higher on the day. Now, what does this mean for volatility? Well, as you can probably guess, volatility moves inversely to the indices. So yes, as we saw the stocks moving higher, we saw volatility moving lower. Volatility, which had nudged higher ahead of FOMC last week, moved lower after. It continues to do so as we see E-minis rallying. Lastly, let's talk about what we have tomorrow. Tomorrow's Tuesday, and we get the Philly Fed non-manufacturing data as well as consumer confidence. We get the home pricing index, and then we'll get more Fed speakers. Recall the Fed speakers had been in their blackout period prior to September FOMC. Well, that's been lifted. Today we heard from several Fed speakers supporting the 50 basis point cut. It'll be interesting to see what more come out of the woodwork, how they support the possibility of more aggressive rate cuts. Will they give us any clarity, or will they also need to see the proof in the pudding when it comes to seeing more actual data? So opening up the week, E-mini S&Ps rally, getting up to 57.75, slightly higher on the session, ahead of tomorrow's Philly Fed non-manufacturing, consumer confidence, and more Fed speakers.